Happy 4th of July to the Philadelphia Semiconductors. The Philadelphia, and this is a index. These are the names in the Philadelphia SOX Index. Philadelphia SOX MMTs. And they led the market down. They also lead rallies as well. We're going into July earnings, though, and generally in seasonality, June and July is softer. We know that Japan is going to be softer. We know that growth is not at the higher levels, and we're rallying up going into a major earnings ahead of the earnings season. Now, what I will show on this chart here, this is the Philadelphia SOX daily chart. And this daily chart moves with the combination of all of these stocks moving up or down together. That's how these sector indices are populated. Now, having said that, at the very same token here, this is what we call an SSG ProShares Trust Semiconductor. It's a bear ETF. So when the semis were selling off here, so let's do a trend line. Let's do the tops here. This was the major top in the semis, and this top was being put in, and it's on our homepage. We have all of these sector indices talking about how low they were going to go. When this thing got, and it broke below its 200-day moving average, the SOX index led the broader NASDAQ comp down, just like the transports. The Philadelphia SOX index, which is a combination of various different chip stocks of different kinds here, that had led the market. They lead markets down, they lead rallies up. We're going to come to a major crossroad, is that right here is that major resistance. We've come up off the bottom. We rallied 5 days up in a row. The bear ETF had made a top in here when we were making the bottoms here. When we went up parabolically to the upside, you could have bought, you could use the option market for the downside here, could use the call side here, put side, call side here in these trades. This is going to come back down. This is where the bottoms of the consolidation was over here. That's the rally. That's the 1, 2, 3, 4, 5 day punch down here to this support level. That's going to be right here. We're going to land there. This is a daily chart. The bull chart is right here. The bear chart. So when we were selling off, you were getting a good move in this bear ETF. And when we do go up, wherever we land, is that we got some key areas here that are going to be very important. And one of them is going to be right up here at this next trend line. If we blow through here, that means that this is going to come back down here and test its lows. We're going to watch how resistance sets up here and how the support level sets up on the bear. Not only that, going into a major earnings season, we've had a 5-day great rally. We were oversold in the chips. We were totally oversold. I will show my MMTs how oversold we were. We got down here to levels at 5% daily DS. Now we are at 73%. This is where the buying opportunities were. And over here in this short-term cycle on the bear now, we got at 92%. So when we were putting the bottom in the bear, we were 21%, but it ran too fast. It got overbought at 92.48%. When that was being put in, that was the top there. And on the flip side, when we were putting the bottom in here, right here, this is that bottom at 5%. This is what they look like. So let's let you see the numbers clearly. 92%, we were going to come down. 5%, we were going to rally. Understanding bear and bull ETFs. There's also a bull ETF that can be traded. However, I'm just showing the sector indice chart that we're going to be monitoring, that when we go into the earnings season and we get deeply oversold here again and we're going to get overbought here, we can still move and travel higher. But remember, July 11th, the earnings season, and they're going to all have to deal with GDP growth. 1.8%, 2.5% on the high side. Earnings estimates, these chips have done extremely well in the last couple of years. That means that the earnings cycle is reaching a market top. The cycle trough, the earnings cycle trough from 2 years ago going into this July quarter means that we're hitting a cycle trough, a top in those earnings estimates. And those earnings estimates have been great for the bull rallies. However, there becomes a point in time that they get, like I said, they get too top-ended on the earnings cycle part of it. The estimates are going to have to come down. That means that we're going to be monitoring, just like the Dow Transports we did, we're going to be monitoring where, once again, when the bull put the top in and the bear put the bottom in, we knew what to do. We took it to breakout here. And this was a short. So if you're making money that direction and you're buying the opposite side of that direction, you're very well balanced in your trades mathematically. Because one's going to go down, you make money, and one's going to go up and you make money. And when you're using the index, so you could have shorted the bull and went long the bear and you get paid twice. We're overbought. We're going to be monitoring how we come up and test these moving averages. 5-day breakout, 5-day reversal, 5-day breakout, 5-day reversal. Remember, a good part of the market and a good part of our economy lies within the chip sector. Okay, and the U.S. does well. And all of these companies some are really good companies in here. But this is the major index going into the earnings. Let it be known today. Now, off video, we're going to be looking at calls, puts. We're going to be looking at the bull, where the bull ETF is. What I would like to point out to the MMTs, that we have 3 charts, and they're all daily charts. Okay? This one here is the SOXL ETF Bull 3X, Bull. Now, when you're looking at the bull rally 5 days up, we are going long here because this bottom was in. Here's the bottom, and here's going to be the resistance. Now, new MMTs, what you see over here is the actual components of the indice of the semiconductor, of all the stocks I showed. This can be shorted when this was at the top here. This is where we made the tops. This is where the breakdown happened all the way down here, and we broke down and we broke to the bottom. At the same time that that was occurring, you can short these. I can get the permissions. These can be shorted. You make money shorting the bull. And then the opposite here is your, once again, let's get this up here in the video. This is the bear. And the bear rallied, and the bull went straight down. You can sell short here. You can buy long here. You can understand that if the sector, the Philadelphia SOX sector of the combination of stocks are selling off, then naturally, if the sector index is going down, MMTs, and this is, this is going to be a lot of training for the rest of your whole year that you're here, is not just in the semis, but lots of other sectors that will have bears and bulls. You could short bulls. You can go long bears. You can do the index analysis. So when we come up on the sector indices, we're going into the earnings, and we come up to other little short-term areas of resistance, and when we fail, this will put the bull, the 3X bull, will come up here. That's another area. Remember that this particular one is trading below the 200-day simple moving average, my friends, on the ETF. That's this bull. This bull ETF is below the 200-day moving average, that green line. That's going to be the resistance. Whereas the index over here, the sector indices, it's back above its 200-day moving average. We're going to see if this can clear that. If that's the case, then when this drops down to support intraday levels over here, then you drop down, you go long. This will break higher. This would go through the 200-day. We'll be monitoring it very carefully. On the flip side, we're going to be monitoring that bear. And where the bear gets support, remember, when the bear doesn't want to go down, that means that the indices sector will put in resistance. It also means that over here on the 3x bull, you're going to put in resistance. Just remember, we'll be monitoring when these things do not want to go down. So write down SSG MMTs, write down SOXL, okay, that's the 3x bull, and then we've got the SOX Philadelphia SOX Index. That's how this is going to be traded when we go into the earnings season. It's a major catalyst to this July earnings season 211 that shall be upon us on July 11th of 2011, and how to get that trade management, how to be long, how to be short, understanding short to when the one gets support and one gets resistance is how to put those trades on.